Hello, chat. Basically, today it's just gonna be chat analysis as usual. Nothing different. We're just looking at what's happening in the market, what has happened before, what is going to happen, and what's currently going on. And today is Tuesday. Tuesday. This is hold on for a second. Let me check my time. This is 12:54 a.m. Almost 1 a.m. GMT. All right, let's get let's get started. So, if you're seeing my video for the first time, or you're just watching me for the first time, my name is Davidson, and on this channel, I come on here to give quickly chart analysis. We look at what has happened before in the market, what is currently going on, and what to expect as well. So, if you're looking forward to get weekly chart analysis, this is the channel for you. This is the right channel for you, and you want to subscribe now. Hit the subscribe button, like this video, and share this video to as many people this video is going to be helpful to them. And also it helps the algorithm push this video as well. So a big thank you and shout out to all of you that are subscribers. I love you all. Let's look at XAUSD. So I trade XAUSD the most. That's because it is volatile. It gives you like the easy money. You make money easily, quickly than currency pairs. I mean, I have on my watch list. You can see my watch list right here. I have NAS 100, Nasdaq, US30, XAUSD, silver, US oil. So these are like what the instruments I trade most of the time. In fact, these are the oh my god, I can't speak English tonight. So these are the instruments I trade: NAS 100, which is Nasdaq. We have US30, XAUSD, silver, and US oil. Then a bit of BTC. I'm not so much of a BTC trader because I'm not so good in trading BTC. I mean, I don't understand the chart. Like, I don't really understand what's going on. But I try to mark out the chart as well to see what is happening. So when we get there, I will show you BTC chart as well. So for now, let's start with XAUSD, which I currently have a trade running. I currently have this trade running on XAUSD. All right, so everything is already live. And if you didn't get when I dropped this trade, you want to join the Telegram channel. So in my Telegram channel, I call out my trade. And number one, so I want to make something clear. I'm not a signal provider. All right. I only share the trades I take. I only come on board and say, hey guys, I think this is going to be a good opportunity for us. So if I'm taking a trade, I'll try as much as possible to share it in the Telegram as well. So you guys can hop on. I don't know if you're feeling me. All right. So let's go. And something else I want to make clear. I'm not selling anything to you, bro. All right. Uh, all of this is free. I'm not selling anything to you. In the channel, I have videos on market structure, basically on how to trade as a new beginner or as intermediate trader. All right. So I'm not selling anything to you. I'm not selling you signals. I'm not selling you mentorship, and I'm not selling you courses. All right. So everything here is literally free. I'm just coming on board to show you, hey, bro, this is what is working for me. Of course, I should share that with you as well. But yeah. So let's get started. Looking at gold, XAUSD has been falling for like a while. I mean, you can tell from this level down here, you can tell that gold has been falling. But right now, we have something else going on. And to understand what is going on here, okay, for this reason, I'm going to take this off for now. Take this off, take this off, take this off, take this off. Okay, so the chart is clear right now. So let's go to the daily time frame. on the daily time frame, what can you see? What can you see on the daily time frame, guys? Let me know in the comment section. On the daily time frame, what can you see right now? This is the highest point price got to. Let me mark this out. This is the highest point price got to, and this is the lowest price fell to. And it rejects, and you know, for every time you see a rejection, a big rejection candle like this, it means that buyers have set in. Buyers are in the market. So, and it's about time the market is going to change that structure. It's going to stop selling and it's going to start buying because buyers have taken control. So whenever you see a huge rejection candle just as this, let me mark this out. Anytime you see a rejection candle, oops, I don't know how to draw. So anytime you see a rejection candle like this, it means that what? Buyers are in the market. Same thing you see here. Look at this. This is an example. When this happened, what did you see? The market started trading back to the upside. So the same way is what is about to happen here. All right. So on the daily time frame, what you can see is that there is no really structure here. And of course, you know, market structure, I always try as much as possible to remind you guys. So we have a lower low, we have this high here, we have a low, we have a higher low, we have a lower low. Why? Because this low is lower than this previous low, and we have a lower high. What should we be expecting? We should be expecting another drop. All right. And if you are looking to buy, where are you looking to buy? Obviously, you are looking to buy at this level. Sorry, you are looking to buy the, or sorry, you are looking to sell rather. Forgive me. You are looking to sell this market at this level. So what are you looking for? And your stop loss is going to be above that high, and you target, what will target be? Your target will just be the previous low. But because we know that this is going to be another lower low, lower than the previous low, so you can just extend, you know, your profit target, and that's simple as that. So what this is a bearish market structure, which is a lower, a low, a higher low, a lower high, sorry, a low, a lower high, a lower low, a lower high, a lower low. All right. So this is a bearish market structure, and which is the same thing we are going to interpret right inside this chart. What can you see? So what I can see right here on gold is literally market came here, all right, a low, a higher low, sorry, a lower high. I keep making a mistake. A lower high. This is a lower high right here, and after this, market just fell all the way to the downside, and there is no like correction that to show okay, oh, we are actually bearish. It would have shown something like this, but that did not happen because why? Buyers took in at this level where we have this huge rejection candle. So let's move forward. So after the daily time frame, we go down to the 4-hour time frame. So on the 4-hour time frame, we're going to look at what is currently happening. So when it comes to following the trend, when it comes to price action, when it comes to market structure, you must follow what the market is showing to you. You must always follow the trend at every given time. All right. So now, after this huge dump, let's bring what we look at on the daily time frame to the 4-hour time frame, because many times the daily time frame is not really clear. All right. So you need to scale down to the 4-hour time frame, to the 1 hour, and then to the 30 minutes. So the higher time frames you are going to look out for is I love to write my things out. So if you are looking out for higher time frame, this is higher time frame. So let me do something like this. Higher time frame, higher time frame. So your higher time frame is going to be number one daily, which is the 1 day. Next one is going to be 4 hour, and the last one is going to be the 1 hour. This is for your higher time frame. Then we also have for the lower time frame. The lower time frame, I basically stick with 30 minutes. 30 minutes time frame. I basically stick with this 30 minutes, but you can go as low as 15 minutes. But the advice I'm going to give you is never go below the 15 minutes time frame. So for me, this is where I trade around. My higher time frame is basically the 1 day, the 4 hour, and the 1 hour. Then when it comes to the lower time frame, I only make use of the 30 minutes. I don't go below 30 minutes. But there are sometimes you're looking for something and you want to scale down to 15 minutes. Yeah, that is cool, but I don't really use the 30 minutes, the 15 minutes rather. Forgive me for that. I don't really use the 15 minutes. All I use is the 30 minutes, which is the lower time frame. I stick with the 30 minutes. I don't go below that. That's because I'm building a structure. So because for you to come from the 1 day to 4 hour to 1 hour, you must have seen something already. So 30 minutes, I only use 30 minutes for my entry to confirm my entry. So that's the only thing I use 30 minutes for, which is the lower time frame. 30 minutes, I don't go below it most of the time. So now this is what you're going to work with. So let me just put this around here. So all right. So now let's look at the current structure. Now this is a low. Market came to this level, pull back, and created what? This was formerly a lower low, right? But because of the current structure, what price is currently doing, if you look at this area, what price is currently doing right here, take a look at this. What is price doing? So this area is where we are going to work with to look at what is price currently doing, because you want to work with the current trend all the time. So we look at this. What is price doing? So from here, this is a high. This is a higher low. Why is this a higher low? Because this low is higher than this previous low. So now this has turned to a low, and this is a higher low because this is higher than this previous low. And what happened? Market created a higher high. After the higher high, we also have a higher low. It is a higher low because it didn't come below this low. Now currently we are supposed to have a higher high right after this, but market could not break above this. Rather, we ended up having equal highs. And now market is somehow correct, trying to correct, then giving us that continuation to the upside. So following this current trend, what can you tell? There is a reversal. There is actually a reversal, and gold is looking to buy back to the upside. Gold is looking to buy back. So this is 4 hour. This is what we can see on the 4 hour time frame. So if you can see, I already mark out the key levels because I don't want this video to be too long. I already mark out these key levels. So if you go down to the 1 hour, which things are going to be really clear. All right, look at the 1 hour. Things is really clear now. Things are really clear. So if you look at this level, we have this touch. So after this correction, we have this where price is trying to pull back to the upside. We have this one touch. We have this second touch right here. We have this third touch, and we have this fourth. What does that tell you? This tells that market has been creating structures to the upside. Look at this: a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. Now this could be a higher low and is correcting back and is continuing back to the upside to give us a higher high. This is potential. So what should you be expecting? So with what I just showed you now, what should you be expecting? You should be expecting to buy. The logical trade entry here is to look for buy opportunities. So, and if you look at this area right here, this was previously a neckline. Let me draw that out. This was previously a neckline. And if you draw this to this level, you can see the price came back to this level again before it started moving to the upside. So in this case, if you didn't catch this move when I shared this in the Telegram, if you were not active to catch the move and you still want to hop into this trade, there's still chance for you. All right, you can choose to enter at this level and your stop loss below this previous low, your stop loss below this low. So you're not going to risk too much because the stop loss is a bit bigger and you're going to target this zone right here. All right. So that's what you're going to look out for. I mean, I'm not a signal provider. I don't call, I don't provide signal, but I do my best to share my trades with you guys. So if you're in the community, you know what I'm talking about. So this is just what I'm looking out for. And like I said, I'm already on this trade. I'm already in this trade. So there's no need for me to get into the trade again. I'm already running in profit. Although there's my position is around this area, according around this area. So I'm very much still holding and I'm holding till I'm swinging this trade. I want to swing it to this level. I'm in here and my stop loss is below here. It's below this low. So because this, why I entered this trade was because when the market was coming down after it made this higher high, when it was correcting, it didn't come below, it didn't go below this one. So if it if this market had gone below, it would have shown that this is no longer valid. This whole structure from here is no longer valid. But because it didn't take out this low and an incurving candle came out, this was why I entered the trade and I'm holding till we buy back, go to the upside. So that is really my focus on gold, what I'm looking out for and what I believe is still going to happen. As you can see, 30 minutes is not so much different from the 1 hour time frame. So that is that for gold. Let's look out for US30. I'm also on US30. I just got into this one not too long. So I was waiting for this correction. I was waiting for this correction right here. This correction. I was waiting for this correction, then a continuation, and I came in. So you can see after this correction, I saw the continuation and I caught in. And your stop loss should always be above the previous high. If you are selling, your stop loss should always be above the previous high. Why? It is because there are sometimes that markets might just want to retest that high, create a double top, then before falling. All right. So imagine your stop loss was in between. So market would definitely take you out and still go in your direction. So to play safe, your stop loss must always be above the previous high. Very important. Very, very important. That's the only way you can stay safe. That's if the market retrace to retest that high. So your stop loss must always be above the previous high. So this is what I'm looking out for on US30. If you go to the 1 hour time frame or to the daily, let's start with the 1 day. From the 1 day, you can see that this market has been crashing. I mean, all the stocks has been crashing. So this market is currently crashing, and my outlook is it's going to fall. This is going to fall from here to this level. Why? Because this is where we have the next valid area of interest, which we have this resistance, we have a breakout, we have a retest, then we continued. So this is my target level. Although I'm not going to hold to this level, I'm just going to take my profit as 1:5. So that's what I'm looking out for. So overall, US30 is bearish. So if you trade US30, it's not too late. You can still find a position. You can still get into the trend. You can still get into this trade right here. So that's basically for US30. Nothing much. Nothing much. So we are just following simple market structure. Simple market structure, and which is one thing I always emphasize. So if you are in a bearish structure, which we have market doing something like this, a higher a lower high, market creates a lower low, you have a lower high. Now, what you are looking out for is this correction. You don't want to buy when market has already sold off. You want to buy when it is correcting. Now, when it's correcting, is much as trying to grab liquidity. All right. So when you hear people use terms like liquidity grab, market is trying to grab some liquidity before continuing in the trend. This is it means that market is there's a pullback or there's a correction. Market is correcting, so it's going to correct and then continue. So you are going to get your entry at the continuation. All right. So if this was the correction, the continuation, you are finding your entry at the continuation. So if you are on the 4 hour time frame, daily time frame, you won't clearly see that opportunity to get into the market. So that's why you have to scale down to the 1 hour and to the 30 minutes. So if you find if 30 minutes is preferable for you to find your entries, you can use 30 minutes. If 15 minutes is preferable for you, you can use 15 minutes, but I don't go below the 30 minutes. That is what works for me. That's the way I stay safe. It helps me cut my losses short. So that is that. And if you want to learn more about market structure and price action, I have a video in the channel where I intensely speak about market structure and price action and how it works. So looking at this, you can already tell, you can really tell, market is always creating the same thing. Came from this level, it's creating the same thing. A higher low, okay, this is like equal high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So it's just like correction, continuation, correction, continuation, correction, continuation. Market is always doing the same thing, the same thing. So I don't care it. I don't care it when people say uh, you take 5 trades and you hit and you take 5 losses. 5 trade, 5 losses. Yeah, it's possible to take 5 trades in a row and hit straight 5 stop losses. Yeah, it's possible, but it is very rare because if you are literally following the trend, if I was looking to sell this market, I won't be looking to sell market at this level. I'll be waiting for a correction. Then when I see a continuation of that trend, you find an entry. That's how to follow the trend, and that's the easiest way to play safe. All right, which is what I just did here. Now let me tell you, I've been waiting for this entry. I've been waiting for this entry since what's today? This is Tuesday night. It's currently 1 a.m. GMT Nigerian time. I've been waiting for this setup since yesterday, Monday when market opened on Monday night at 12 a.m. I was waiting for this. As at then, market was at this level. Let me show you. Market was at this level, and I was waiting for market to come into this support because obviously this is a support level. So I was waiting for market to come into this support, then give me that pullback, give me that correction. Then after the correction, show me signs of continuation. Then I'll find my entry. So I came back to the chart this evening. I saw this correction, then I saw a continuation, and I went to the 30 minutes time frame. So on the 30 minutes time frame, I was able to find my entry and stop loss above the previous high. Easiest way to play safe. Easiest way to play safe. All right. So after US30, I've, I've talked about Nasdaq. Have I? I don't think I've touched Nasdaq. So Nasdaq is also moving the same way US30 is moving. I'm also on I'm also on Nasdaq. Okay, I'm on 3 trades. I'm on Nasdaq, I'm on US30, and I'm also on gold. So 3 positions currently opening and running 3 positions running in profit. All right. So this is Nasdaq. Nas 100. It's also the same thing. It's also the same thing. If you can see this clearly, It's also the same thing, a correction. So I waited for this correction. This is the correction. I saw this. So when I saw this one, price already made a correction and continuation. When I saw this market, it was at this level. I know I can't enter. So I waited patiently for market to give me another correction before I get into the market. So I waited. When I came back this evening as well, I saw this correction and I saw the continuation. Then I was like, okay, since it has already taken out this low, why not get into the market? So I called in and obviously stop loss above the previous high. All right. So same way, what I'm looking out for on silver is pretty clear. So this is my outlook on silver. I already marked this one last night. So this one I'm looking out for on silver. If silver is going to fall, then I need it to come below here. I need it to fall below this level, do a correction and a continuation, and I'm going to sell. I'm going to short silver. But if this does not happen, I'm not shorting silver. So I'm just going to wait for it to, maybe retest this high. Sorry, bounce off this, bounce off this trend line, then come up here, take out these highs. This is a high, this is a high. So this is two highs, like double top. So I need to take this out, do a correction, a little pullback, then I get into the market. That's what I'm looking out for. So this is my two scenarios on silver, my bullish scenarios and my bearish scenario. And after that, I have US oil. Crazily, I didn't cut into this entry. I missed this entry. So guys, I think this is where I'm going to ask for your help. When you miss your entry, what do you do? When you miss a trade, what do you do? When I came to my chart and I saw that, like last night, I was literally waiting for a correction. Last night, the market was at this level. Then when market opened, it pumped all the way to the upside. It pumped all the way above the resistance level. But obviously, I didn't want to rush in because I didn't want to be taken out. And if I entered into this market at this level, my stop loss would have just been below here and I would have been taken out of the market because yeah, I know where I would have placed my stop loss. I would have literally been taken out. So I was waiting for a pullback. I was waiting for a correction. I was patiently waiting, patiently waiting. But when I came back to my chart, I discovered that the pullback happened, the correction already happened, the continuation happened. I just came back to saw that market was here. So what I would have did was that I would have set a buy limit, but unfortunately my mind was not there. I don't know what happened last night. I guess because it was a Sunday and I was so tired. So I came back to my chart, market already moved. So what I'm looking out for now is I can't get into this market at this level. Why? Because number one, if I get into this market at this level, look, my stop loss is going to be all the way down here. The stop loss is too wide. It's too wide. It's too wide, all right? The risk is too much. So I'm not going to risk this much. I'm just going to wait for, if market is going to continue, it's going to continue a little bit, then give me that pullback, give me that correction, then a continuation, you get into the market. So if you get into the market at the continuation and your stop loss below here, so that's how you manage risks also. That's how you manage risks. At this point, it is already cost. It's already, you don't want to buy from the high. Remember, you want to buy from the low and sell high. You want to buy from the low. So you either wait for a correction, then we enter, or not enter at all. So this is my outlook on US oil. So it's either continue, then give me that pullback, then I find my entry. That's what I'm looking out for. Then for BTC USD, for guys that trade BTC, I don't really trade BTC, but trust me, every time I do analysis here, it always takes me out. So this was what I saw last night. As at last night, market was at this level. Market was here doing something like this. market was at this level. So at the opening of the market, it fell down. I say it fell down. Markets dropped. So BTC dropped to this level to 64,000. Then this evening as well, when I came back to my chart, it corrected to this level, and after the correction, continuation happened. So it obviously gonna come back to this level here, to this support level. So what I was expecting this to continue, I was expecting it to continue to this level, then I sell. But when the market opened, it just sold immediately. This was why I stayed out of the market. This was why I stayed out of BTC. But when I came back, I saw that it has corrected. And so if I was on my chart when this correction happened, I would have entered at this continuation. Sorry, I would have entered at this continuation, my stop loss above the previous high, and my target is going to be this level. A very good sell, a very good short. Or I already missed this, so till next time. I mean, that's all that's all for this lesson. Not really a lesson. That's all for this analysis, and we'll call it a day. So the week is very much positive. Remember, learn how to manage your risks. Learn how to manage your risks. I think the next video I should do is on risk management, how to manage your risks, how to manage. So I don't want there's too much blame of accounts going on. You don't want to lose your account, because take it like business. So if you blow your account today, you won't be able to come to the market tomorrow. So you want to do everything possible to secure your account. You don't want to lose it. You want to be able to come back to the market tomorrow. All right? You don't want to lose it. You want to be able to come back to the market tomorrow. All right. So that being said, we call it a day. And thank you so much for watching till this time. If you actually watched till this time, thank you so much. Like the video, subscribe to the channel. Also share this video to people it might help. And I'll see you next time. Bye for now.